Thanks so much, Scarlett. And with today's risk off, we're going to be taking a little bit of a bigger look at that, considering it interrupts a more than 10% rally from the December lows for the major averages. Let's take a look at what's happening on the day. Take a look at the S&P 500 there. Near session lows down 1.7%. The NASDAQ 100 down 2.2%. The chip sector really leading the way down 3.1%, flirting with its 50-day moving average. Confirmed all of that risk asset selling, confirmed by the fact that Haven bonds are being bought. So again, we have a risk-off day after lots of risk on. In fact, let's take a look at this dynamic in the Bloomberg. This is a one-year chart, and this is comprised of last year's range between about 2,600 and 2,800. But you can see all of the whipsaws up and down. But for much of last year, we did have the S&P 500 above the 50-day moving average in pink. That tells you the buyers were very much in control. But then on the sell-off last year, below that 50-day moving average. Late last week, back above the 50-day moving average. Today, flirting with it in this area of congestion. Possibly a bearish pennant similar to the other areas of congestion that proved out to be bearish may suggest that the S&P 500 will go back below that all-important level of 2,600. Here to talk more about all of this, Joe Perry of Forex Analytix. Joe, thank you for taking the time. What do you think of that chart? Do you think that the bias is to the downside or to the upside?
Well, it's pretty interesting because I think a lot of emphasis was put on the China-U.S. trade talks, and I think that's why we pushed up off the lows. Also, I think at the beginning of the year there was a lot of money that needed to be put to work because people stepped aside in December after all the volatility. So I think that now they're ready. So now with people back in the markets, things are getting going again.
Yeah, so the sentiment is turning with that. So let's take a look at how you would position your trade here. And this is a great chart and a version of a chart that we looked at last year when you correctly talked about the bearish action that we did in fact have.
So look at that big push we had off the low. That was pretty strong. Almost all those are up bars. And the RSI is only in the middle of 54 right there. So that means there still could be room on the upside. We are having a decent pullback today, but now that we're in the middle there, I'm not quite sure where it's going to go from here. I have a neutral bias. I was short up to, I went in at 2,600 and I got stopped out at 2,650. That was my level. But now that we are up in this area, in this range, we need to see something happen here from this level in order for it to really go one way or another. If we formed a flag pennant or a pennant from here, we may look for it to go higher. If it pushes below 2580, I'd look for some kind of setup there, possibly go short. If we went up towards the triple top that we see up there, up at 2820, then I'm sorry, yeah, 2820, then that probably is going to push higher and could even test all-time highs.
So really looking for a catalyst either to the upside or the downside, or whether or not this is actually just a bullish rally within a bear market, as many have been contending. Yes. Let's talk about the S&P 500 E-mini futures themselves, and I'm going to take a look here. This is the description page for those who want to trade. And something that always stands out to me is the leverage.
Sure. Well, take a look. Each contract is worth $12.50, which is only 1/4 of a big S&P size. So it's a lot cheaper to trade. And because of that, there's a lot more people that trade it as opposed to the big ones. All the volume is in there, the leverage is in there, and all the liquidity is in there. And that's really why people want to trade, is for the liquidity. So it's easier to trade at only $12.50 a tick. It's a lot easier to trade than the big S&P.
Yeah, you get to control a lot of market for not so much money put in. Yes. Joe Perry of Forex Analytix, thanks so much for taking the time to join us for Charting Futures. Scarlett, back to you. Thank you.